Hello, hope you had a great weekend. Today we're talking to Rick Haas about what they've got going on at United Real Estate. But today we're going to pinpoint a few more questions and just ask a little bit more about the market. So, Rick, what do you think has happened in the market in the past 2 years?
Well, we talk about an accelerated rate of change. I mean, it was fast before COVID accelerated the market, but in the last 2 years, we've seen a tremendous migration from the brokerage business. We've seen a tremendous migration from more traditional to what I call the fast-moving water, which the real estate brokerage business, which is the transaction fee model. At United, we've hit a great scale, so we have the ability to deliver technology, training and education, and marketing tools and services, yet still be able to deliver almost all of the gross commission income into our agents' paychecks every time they have a closing. So that's, from a brokerage model perspective, the migration continues. From the real estate market's perspective, consumer preferences have changed, wanting to get out of vertical communities into more urban and suburban. So urban is migrated somewhat to suburban. Suburban has migrated somewhat to rural. And with over 17,000 agents covering all of those markets, we've been the beneficiary of that. But consumer preferences in terms of housing, we've seen a lot of change in how much space, of course, with the options that people have today to work from home, less need to commute into the office and use a physical office space provided by their employer. We're seeing people wanting more homes with more square footage dedicated to that home office work environment. A place where they can go and the dogs bark in the background and the kids are doing what they do. They still have some seclusion to do their work.
It's amazing how people can work remotely now and everything on Zoom and stuff like that. And videos become so prevalent and everything like that. And all the changes in technology that's happened in the past couple of years that people have accepted into the real estate industry. What do you see as, maybe some markers in the next couple of years that might come down the path that could be very interesting for people that are in the business?
Well, starting with the market, we're going to see the Fed implement their easing plan. We're going to see interest rates start to slowly creep up. I hope it's slow. But as those interest rates slowly creep up, Rob, we're going to see a return to a more normalized market. Just this morning, I read an article where the National Association of Realtors chief economist Lawrence Yun was saying he expects a 3 to 6% price increase. But guess what? I think it was Goldman Sachs came out and said, no, it's going to be 16 to 20% year-over-year price increases again. So I think the jury's still out on where the market goes, but clearly one of the driving forces behind what happens to home prices is going to be determined by supply. How much more inventory will hit the market. Something happened in the past that ties to your question about the future. Over the last 10 to 12 years, homeowners had the opportunity to go out and buy a house and have historically record low financing costs, right? So because of that, it wasn't just a way to save money, it was a way to buy more house. And so when over the last 12 to 15 years, people bought more house than they normally would, which satiated their move-up needs. So They got the square footage, right? They got the location, they got the school system they need. Now they don't need to move as quickly. So 12 years ago, I think the average hold time for a piece of real estate in America was somewhere right around 6.5 years. Today, it's just around 12. So it's almost doubled in between the time that a homeowner holds a house between moves. What that means is the market is being undersupplied on a continual basis for the new household creation demand that it's facing. So I think supply is going to be a big issue. People are hopeful that new construction is going to satiate some of that need, but in its best year ever, which was last year, in the last 12 months, new construction only makes up about 20% of the overall housing market. That means 80% needs to correct itself in terms of providing more supply. So jury's out on how supply will be handled, and that'll determine a great deal what happens in the future. But what triggered that was, over a decade of low interest rates that allowed people to buy much bigger, much better housing, and they don't have to move when their family expands.
I always say I love talking to Rick because he's such an expert in the industry. There's a reason why you're the point person for United Real Estate. And I think anybody looking to maybe have a look at United franchising or anything like that needs to talk to Rick. So his information is below this video, and you can go ahead and click on the link and book an appointment to talk to him. We thank everybody for tuning in today, and have an amazing day.
And Rob, before we go, I just want to say thanks to you for helping us do what we do. We had year over year 20% organic growth. Of course, we've been involved in some very well publicized mergers and acquisitions. We've taken on some real gems in terms of leadership of those companies and entered new markets. But part of it is the block and tackling every single day, getting out, getting our message done. And thank you for helping us get that done.
It's my pleasure, Rick. We'll see everybody on the next episode.